Hey everyone, welcome to another video on this channel. And nowadays, if you just open the news, there is only one thing that you are going to hear about: gold hitting a new all-time high. Every single day, if you take a look at it, gold prices seem to be scaling to a new high, and very recently it hit nearly 1 lakh rupees for 10 grams of gold. So if you take a look at it, everywhere around it is only talk about gold which is going on, because on one hand the equity investments are coming down and on the other hand gold is scaling up to a new all-time high. If you actually take a look at it, in the last 15 months, that is not even 1.5 years, asset something as big as gold has surged close to around 60% in totality. So today we are going to explore whether it is good to buy this asset at the current price or not. So I am not going to give any kind of technical view or anything of that sort. All I am going to do is show you the history, show you how gold prices have reacted at different points in time, and after the reaction of gold, how the next few decades have been. So my point here is just to present you whatever has happened earlier and not to put any personal view across. So this is going to be a completely data driven video and I am pretty sure you're going to love it. So before moving on, just make sure, in case if you're finding the content on this channel valuable, you hit the like button, share this video and also hit the subscribe button. And also one more very important thing which I would like to tell you is, at QuickAlpha we have something called as the learning path, which is a systematic way of approaching both equities and option trading. So here we take in only 5 students per batch, and our batch for April, May, June is already filled and we only have registrations open for July batch. In case if you are interested, you can check out the link in the description below or simply call the number put in the description below to know more about the same. With this, let's quickly move on to the video. So right over here, I have put the chart of gold. And if you see from January 2024, or maybe February 2024, gold has surged nearly close to around 70%. And this is one of the biggest rallies gold has seen in its history. So surging 70% or 80% in hardly matter of 1 year, 2 months, 1 year, 3 months is something which is unheard of. So if you compare this with Nifty, for example, so I'll just put a comparison here. So when I put Nifty chart for comparison here, and when you take a look at it, so you can see gold has clearly outperformed Nifty from 2023. As I start increasing the time frame, so let me just go slightly back, you can see even from something like 2019, right? So gold and Nifty have delivered almost the same amount of returns. As we further scale back to something like 2018, you see gold has further outperformed Nifty. So let's go back to 2015, which is almost a decade, right? And here you see that so Nifty and gold from 2015 May have literally, we are exactly 10 years out and there has been no difference in the return of Nifty or gold. So they are almost giving similar kind of return. So gold on the other hand has come with much lesser drawdown. So when you see this move, right, gold overall has much lesser drawdown when compared to Nifty, which has seen huge dips before. But in spite of this, both have ended up giving the same returns. The question here really comes, so should I simply invest in gold rather than investing in Nifty? So let us take a look at the data. So first thing what we are going to do is try to zoom out as far as possible and try to take a very long-term picture of the same. So let's come from 2005, which is almost 20 years back. And if you take a look at it, from the time span of almost around 20 years, Nifty has clearly outperformed gold. But when you start reducing the time frame, so you see that the outperformance usually starts to reduce. So this is case with India, but if you take a look at it on a broader perspective, right? So most of the global economies which are not growing fast, maybe it might be any European economy or it might be Japanese economy. So there the stock market has severely underperformed the returns of gold. On the other hand, so gold is not always as pleasant as it seems, right? So there have been cycles for gold where it has not delivered any returns in the, say, 1 decade, 2 decade or even 3 decade periods. And I'm going to show you those exactly how it has happened. So when you take a look at it, from the period of 1976 to 1980, 1970 to 1980 period was when the gold saw some extreme boom, and there are multiple reasons for this. So the first reason being, once the Bretton Woods system went off, where they used to keep gold for backing the currency printing. So then during the period of 1979-1980, so US experienced stagflation. That means there was very high inflation and very slow economic growth. So during this period, the dollar also started weakening and everybody went for gold. So gold was the safe haven and everybody wanted to purchase gold. So gold saw a huge demand, and you can literally see the rise of gold prices right over here. So from January of 1979, so up until January of 1980, so just in a span of 1 year, the gold prices were up nearly 300%. So this is something which is unheard of, right? So you don't see assets something as big as gold go 300% just in span of 1 year, right? So then what happened is something which you should know, right? Because gold has a historical return rate of anywhere around 8 to 9%. That is historically what gold has delivered. So whenever there has been series of outperformance or years of continuous outperformance in gold, so generally it tends to happen that it will be followed by a long period of underperformance. So you can see it made a high of nearly $800 per ounce. From here, you can see the year is 1980. So all the way from 1980 to maybe by 1993 or something like even 1985, gold was down nearly 70%. Have you ever heard of gold coming down by 60 or 70%? I would say never, right? So you would have never seen gold prices come down by 60%, but it had actually happened. And when you further go down, right, so by year 2000, so it had come down by 75% from almost $850 per ounce to something like $250 per ounce. So from here, if you take a look at gold and Nifty from the year of 1999, again you will see gold has significantly outperformed Nifty because the base here is totally different. So you are seeing gold from the lowest level and Nifty at not so low level, right? So since the base is totally different, so it appears that if you see from the year of 2000, gold has significantly outperformed the markets. So then you can see it only breached again the back to the levels of $800 or $900 per ounce when the global economic crisis took place. Around the time of 2008 is when it hit back the levels of 800, 900 when the economic crisis actually took place. So it took nearly close to around 30 years for the gold prices to come back. So from the point where it made a previous peak, it took 30 years for us to simply get back to the same level. But in India, it was a different feeling for us. Why? Because simply Indian rupee was weakening. As and when the Indian rupee started to weaken, so we didn't see that our gold, what we held, was depreciating so much, right? So here, let's say from 40, right? So currently we are at 80 rupees per dollar. Our value of rupee has literally become half, and since the value of rupee has been lost against dollar and against gold, so automatically the gold what we held, even though it was falling in value, it looked different to us as Indians because our rupee was also falling in value. So post that, you see what happened after this big rally of gold. Again you can see from 2007 all the way to 2008, it was a surge of nearly 50% and odd, and it was a massive rally in gold. So post that, nearly till 2010, right? So 2 years, it was a complete consolidation in gold, and then we get one of the biggest rallies in gold. So you see right over here, the rally starts around 2000, end of 2009, and by 2011, the gold was up by nearly 90%. Just close to around 2 years, the asset is up by 100%. So this sounds very similar to what has happened now. So within 2 years, gold is up nearly around 100%. And then what follows is a long consolidation. So further you can see from 2011, right? So gold prices started to fall. Gold prices had literally come down by 50%. So these are the things which we don't get to see staying in India because our rupee is also weakening at the same time. So relatively it looks like nothing is happening, but in reality for a person sitting in US, he is also experiencing a 50% dip in gold prices. But we here don't experience the similar kind of dip. Right. So this asset, which which made its peak in 2011, again came back to the same levels and broke it only during something like 2022 or 23. It was again one full decade where this asset gave zero returns to investors. So the idea is that not that you don't enter gold, but don't enter into peak during the gold cycle, because we have seen multiple times whenever gold actually starts to make a peak, so it is going to be a long consolidation, might not be just for 1 or 2 years, it will be for 5 years, 7 years, 10 years, where it does not give you any returns at all. So that is why it becomes really essential for us to not to fall into this trap of FOMO and start entering gold right away. So it is good that we go by the data, right? So whenever gold prices fall, please accumulate, but don't chase the rising prices of gold, because by chance, if you don't end up in the good place, you will be stuck with very high prices for gold for a very, very long time. So it is always the market cycle. And again, there are 2-3 more things, or 2-3 very important things to keep in mind when you're chasing gold. So all this while, right, so rupee was continuously weakening. That's the reason even though the gold prices fell, you didn't really feel the heat, because the rupee had also lost the value. So as and when our economy starts to strengthen and rupee starts to stabilize, so you will also start to feel the pinch as gold starts to dip, right? So that is one more very important thing to keep in mind. So tomorrow, let's say there is a 40% dip and rupee remains to be at 85 to 90 range, then you are also going to experience that 40% dip with your gold holdings. So overall, if you take a look at it, all these days what has happened is, so whenever you have seen a rally in gold, so the overall growth has been magnified because of the weakening rupee, and whenever the gold has seen any kind of a dip, the overall dip has minimized because of the weakening rupee. But if the rupee stabilizes, the same amount or same effect is not going to be passed on to you, right? So you are going to start experiencing that, oh, okay, so the gold which I have bought is actually falling much more than what it did previously. So entire market moves in cycle, right? It is not just gold, everything moves in cycle. And here I can just put even S&P 500, for example, side by side. So if you see in the longer run, definitely equities have a tendency to outperform gold. So this is from 1975. You can see a massive and a clear outperformance which has taken place in equity when compared to gold. And the only reason for that is definitely there is higher risk with equities, and higher risk usually follows up with higher reward. And that is something which you have seen in the USD to USD terms, right? So as long as the economy is growing, so usually the equity markets will tend to do better than gold. But one very important thing to note here is before you do anything, so don't fall into the trap of news, don't fall into the trap of FOMO. So whenever something becomes cheap, you can start entering that and you can start exiting the other asset. So this is something which is preached by everybody. So buy something which is when it falls and sell when it rises, right? So you can switch between gold and equities in a similar way, because the combination of gold and equity has delivered almost the same returns of equity or gold with much lesser drawdown. You can make use of this combination to have it in your portfolio to actually end up getting a better risk adjusted return. So I hope I am able to bring some fresh perspective to you with this video, that don't chase the price, because price always moves in cycle. So it is now the gold is going up. There are periods for decades when gold has not performed, and that is something that you have to keep in mind before you end up going and purchasing or holding gold just because it has hit 1 lakh. So I hope you have enjoyed this video. If so, make sure to hit the like button, share this video and follow me for more.